You are listening to Mining Stock Education, where you'll learn from the top leaders in the natural resource sector and uncover quality mining investment opportunities.
Warren Buffett, in my opinion, is the ultimate insider. His father was a congressman. He knows, he knows the ins and outs of DC better than anybody out there, and he's benefited throughout his whole career.
So you don't venerate him the way some people do then with that comment? Or?
No, I don't.
I'm Bill Powers. It's Mining Stock Education, and speaking today with trader Nick Santiago, my friend over at MiningStockEducation.com for our monthly check-in. Nick, welcome back onto the show. And in the news and on Twitter, I've seen a lot recently that Michael Burry is shorting the NASDAQ and the S&P and so forth with some put options. What's your take on this?
I don't know. I really don't track Michael Burry too much. I get asked that question a lot. In fact, I actually put his 13F filing on my Twitter feed yesterday or the day before. So I do get asked this question a lot, but he's not a market timer, as you know. I know he comes from the Big Short fame. That was a pain trade for him before he made his fortune. So, again, he's not a market timer, but he has a good read on the markets. And if he is short, I like that position right now. I think the month of August is a little bit challenging because we have light volume historically out here this month, hence the term summer doldrums. But as we get into September and October, I think the markets are going lower. So I kind of like it if he is short right now. I think that he's got a good read on it at this time.
So if the markets are less liquid, does that create more opportunities or more risks for you as a trader?
Well, anytime you have liquidity come out of the system, it's going to favor the downside. The downside is always much quicker. Hence the term, the markets take the elevator down and the stairs up. Now, we all know since March 13th, in fact, when we had the financial crisis, the markets pretty much went straight up really throughout I think we had about a sideways move for about 6 weeks, but we had a big March low and then the markets went higher. That was simply done on the back of liquidity being provided to the banks, not only here in the US, but also globally around the world, because we know that Credit Suisse got taken under by UBS, and we know that the Fed and the other central banks around the world also provided liquidity for each other. So even though they're not calling it the so-called quantitative easing, it's probably more than a quantitative easing going on. And that's what, inflated the markets. But anytime you inflate asset prices, it comes with a price, and it's called inflation. And we have wars going on now, not only in Russia, but also in Africa. And those are proxy wars and between the US and Russia, and that's inflationary. And if you get conflict between China and Taiwan, that is going to be extremely inflationary because we import so many goods from China and Taiwan. So just think about if that slowed down or stopped, that would be very, very problematic, and you'd see inflation probably go through the roof. Now, that's probably going to come down the pipeline as we approach 2024. So there are a lot of headwinds out here right now, and that's just to name a few. There are many others.
Nick, with this 13F quarterly filings, like a Michael Burry or a Warren Buffett does some for Berkshire Hathaway, do you study those and trade around the psychology that and in the market that those filings create?
I look at them because I just like to see, because when those come out, the crowd is going to follow them. I will never follow them. I will always look at the stock chart, and I was a little bit surprised to see Warren Buffett buy home builders here. But obviously, he's buying them at extreme highs, so he knows something is going on, right? This is the ultimate, Warren Buffett, in my opinion, is the ultimate insider. His father was a congressman. He knows, he knows the ins and outs of DC better than anybody out there, and he's benefited throughout his whole career.
So you don't venerate him the way some people do then with that comment? Or?
No, I don't. I remember just not even that long ago, I was in a put option on Ally Financial, and it came out, and he had bought it, and the stock went up to $37, and I told my members, short more, buy puts more, because it's going down and the charts don't lie. He's not a market timer. He's obviously in it for some other reason. And ultimately, I was correct and he was wrong. So, I'm not looking to get into war with these people or to battle them, but they're not smarter than the charts. They don't know more than the charts. And we just have to read the charts correctly. And sometimes I'll make mistakes and read them wrong. It's a very humbling business. But, these guys are all insiders, right? They all know, they all get deals, and they know what's coming around the pipeline. they're greasing politicians from every end. So, they're very much tied into what's going on in the world. And that's how they make their money. I don't make my money like that. I make it with the charts.
Okay, so Nick, if you're having coffee with Buffett and you say, Buffett, I study the charts, and he says, Santiago, I create the charts, what do you say?
I say, I think you do create the charts because you are the guy that has the inside information. Just like these politicians that, go into Congress for 4 years with less than $5,000 in their bank account, come out multimillionaires. How did they do it? They didn't look at a chart. I assure you that much. They knew who was getting that contract. They knew who was getting that contract. So that's just what makes the world go round. I don't get angry at it. It's just the way it is. I'm not one of them.
And with the quarterly filings, when they come out, 6 weeks after the last day in the quarter, they could have already sold the stock that everybody, or the put option that everybody's getting so excited about, right?
Absolutely. And I remember last time, Michael Burry, I remember the big uproar. He was saying, had a tweet out there, sell everything or something like that. And then he said, took it down. He said, I was wrong, and that was the rally. So don't follow these guys. Just follow the charts and let the charts tell you what to do. You're not going to be right with the charts either 100% of the time, but you'll be right a lot more than you're wrong. And with good money management, that's the name of the game, So I always tell everybody, don't listen to these guys. You're not in that club like the old George Carlin skit. You're not one of them. And, that you just watch the charts. That's the best you could do is just follow the charts.
One chart that me and a lot of my listeners pay attention to is the volume in the TSXV, the Toronto Stock Exchange Venture, and it's at lows, multi-year lows. Nick, when you see the small caps at such small volume, what does this mean to you as a trader?
Yeah, you want to be, it just tells you that there's no interest in that group right now. And you got to be very, very careful. Nobody's excited about that area right now. And that's the one thing I follow too, is the volume, because light volume markets generally will sustain big cap equities. It'll help the markets float. But when you're trading something like the Toronto Venture and you have light volume like that, there's really no excitement in those equities. And there's not going to be any excitement until the bigger equities, because it's very commodity rich. Until those start to move, then you'll see the venture, take off. But when you have light volume like that, you got to keep an eye out for it, because when the big guys start to go, meaning the bigger stocks out there, and they start to move, the little guys aren't going to be far behind. So, you just keep an eye on the chart. You let the chart show you what's going on. And when it starts to percolate, that's when you get involved. But in the meantime, it's probably a market that's not going to do a whole lot for now.
Second half of this year, do you expect to see a tech to energy rotation?
I'm not so sure. Right now we've had a really good run in energy again recently. Oil got up to $85. That was my target. If it closed above 75, I told my members it would go to 85. It got to 84, 89. A lot of the energy stocks still have some more upside in the near term, but they're going to peter out at some point because they're just going to get too extended. But look at the runs you've had in some of the refineries. Look at the run that you've had in even some of these integrateds recently. And they still look pretty good on the charts. And the biggest one of them all has been oil services. If you look at the OIH, which is the oil services ETF, this has had the biggest run. This is going to go to 260, which is even higher than where it is now. So, when they have such big runs like that, I'm kind of in the camp that, the run could last a little bit longer, then the money's going to rotate out of there because everybody is going to come late to the party. That's kind of the way it works. So I would just be careful, making that broad statement or painting that brush that money's going to go from, tech to energy. It could be the other way around, or it could go somewhere else to consumer goods. That's a sector or an industry group that is starting to interest me. The Colgates of the world, the Kimberly-Clarks, the boring stuff, the non-sexy stuff, the stuff that nobody pays attention to. But I've got levels for all of those. Those are the stocks I'm looking to pursue or can get into soon.
Procter & Gamble, because you go in and out of that stock too, right?
I do, but Procter has been, one that I would have to wait for a lower price point. But Kimberly-Clark is setting up, that's Colgate is setting up. Possibly Kraft Heinz, which I'm not so sure. I don't love that one. I was just in that with an option recently. But, you're going to see a lot of these stocks in that group. Church & Dwight might be another one, So there's going to be a bunch of them in there. And, those are companies that probably have pricing power no matter what, because you're not giving up your razor blades, you're not giving up your toilet paper. And that's the way it goes.
With the recent move in oil, have you adjusted the bottom that you think it's going to hit before it goes to an all-time high? You mentioned $50 oil possibly.
Yeah, so right now we're at a medium-term top for oil. I think, around that 85 level, maybe it goes to 85.50. Anything can change if you get some kind of a geopolitical event, but that was all I saw if it closed above 75. So I have my group kind of neutral right now because this Friday is options expiration for the month of August. So we'll get a lot of, game playing, a lot of whipsaw, a lot of institutional game playing this week. So we don't want to make too much out of it. But if oil starts to break down, it's got to take out the May pivot in order to get to 50. But if it gets to 50, it's going to be the trade of the decade. So that, in my opinion, that's, but it has a lot of ifs before it gets there. So we'll see how it plays out. Right now, you're at 83 or something like that. It's not even close. So you got to take out that May pivot low in order to get to 50.
Okay, so if oil at 50 is the trade of the decade, we've talked in the past, if gold hits that 50-ish area, would that be a generational trade?
I think it will be. I think
that would be a better trade than even the oil trade if oil gets to 50.
Well, I think all these commodities are going to go into a boom. So I think we're in the infancy here, like the very, very start of a commodity super surge. And why I say that is when throughout history, and you could go back to Roman times and look at this stuff yourself, if you could find some good books in a library. But anytime people have lost faith in government or faith in, your system, they go right to hard assets. They want stuff that the old saying is that you can drop on your toe and you're going to get a bruise. So they want hard assets. People are going to want stuff that they can physically, tangibly hold. And, you can't think of something better than gold and silver. Can't think of something better than crude oil. Can't think of something better than maybe lumber. It's always going to be a hard asset. And that's where I think the money is going to rotate into. And copper is another one. Copper's got another fall to go. But, these things are all set at dipping them to flip them. And that's how it's going to work. And they're going to be incredible trades. These going to be very reminiscent and similar of what happened in 2020, right? Nobody liked copper in 2020. We were buying it up, scooping it up left and right, and making small fortunes off of it. Nobody liked gold or silver back then, and we were scooping it up, at that point in time. So it's going to be very reminiscent of 2020 when all that money was just injected into the system. So, again, these are trades that are not perfect right now. They're not really ready yet, but they're setting up. The setups are coming in.
Nick, I'm learning more about farming. Last year, I bought a small farm that I'm working with a local farmer, so I learn a lot from him. He's in his 60s, so I like to have conversations. And one of the things that he taught me was that there's not necessarily a correlation between the price of diesel that he has to pay for all of his massive equipment and what he gets paid for the commodity that he produces from the land. Have you done any correlation studies like between the price of oil and the price of grains or anything like that?
I haven't, and I'll tell you why, Bill, because for me, I'm truly a chartist. So, nothing out there makes sense. And the market is always so forward-looking. It looks sometimes 6, 9 months, 12 months into the future. It never looks in the back or the rearview mirror. So, for me, it's always been about the chart. And I'm long wheat right now. I own wheat right now. And I've been in this trade before. It was one of my best swing trades this year, and I'm back in it now. So, I got to go with the charts. I don't really worry about anything else out there. I just go with, I know where the money flow is. And if the institutions are sitting there or close by, that's when I get in, because they're the guys that move markets. It's not Nick Santiago with my accounts. It's not anybody else. It's the institutional crowd that moves markets. And they're always forward looking 6, 9, 12 months out.
Don't the institutions need retail too for liquidity though? Isn't there kind of like a balance between institutions and retail?
Well, there is, and there are going to be retail guys that get in there, but it's never the retail crowd that moves markets. I'll give you a perfect example of this. So you remember when the meme stocks were
AMC,
so hot? AMC, and the other one was GameStop.
Yep.
So, I tweeted out one time, I was like, the institutions are really moving this. And they would, no, it's the Reddit board. Well, who do you think is looking at these Reddit boards, right? It's the institution. So this guy, Shamat Palapataya, gets on CNBC and he's saying, hey, I saw this and, I made whatever, $1 million in 2 days because, this is a hot little market right here. We can get these guys to push it up. He basically told, he's a big institution. He basically said, well, my fund, I just went in there and, picked it up and rode that thing all the way up to whatever the price was, some ridiculous number. But you can see it's always institutions, so just because, it's on a Reddit board doesn't mean that the institutions aren't looking at that. They're certainly looking at it. And the only way I could ever follow that stuff is by looking at the charts. I can't make heads or tails any other way.
But the little guy, if he plays it right, can still make money with that because as I've said to you and even on this show, I have an unnamed friend that made multiple 7 figures in a week off of AMC and GameStop with options.
Without a doubt. And that's the beauty of it. If you could read the charts too, you're going to be one step ahead because when everybody's in there pushing it up, you could be selling into that strength. And that's the really good part about it, So again, I have a friend, my painter, in fact, he made $100,000 on one of these vaccine offshoots that was small cap and in 1 day. He said, and he came over, he showed me, look at this, I made over 100K in 1 day. I was so happy for him.
Your painter's giving you stock tips now?
Yeah, he came over to show me and he was like, look at this. It was like Vax T or whatever. He goes, you ever trade this? I said, absolutely not. I'll never trade that stock. It's just not something that I would trade.
Nick, every time I bring a stock up to you, though, if I tell you I invest, then you look at the chart and then you give me your analysis, right? Did you give him your analysis, say, watch for this sell point?
No, but you know what he did that was remarkable? He goes, when everybody got in it, I knew I had to get out. And the thing ran up, whatever, some ridiculous number. I don't know if it was $30 or $60 in a day or whatever it was. Made over $100,000. I was like, you did everything perfect. I couldn't even give you any advice. So that was good to see. And, I probably would have sold earlier than him. I would have been out of that thing, with my measly 15%, Bill, Here he made hundreds.
And then I had a friend who did good in biotech, or a friend of a friend, I should say. And because of the tax situation, he donated $500,000 worth of stock to his church. And so the church had $500,000 worth of this little biotech stock that they didn't know what to do with, Nick. And by the time they sold it, it was a small fraction of the $500,000, which it was at the point that it was donated. So a lot of these things, you really got to be on top of it, don't you, when they run up?
Oh, absolutely. All these small caps or micro caps, that's what they're going to do. They're going to get somebody in there to get people excited. And then when they squeeze or they get a big movement, because you'll notice a lot of those stocks don't trade any real volume. All of a sudden, then they go to like 30 million or 50 million or 100 million shares in 1 day. You got to sell into that excitement. Otherwise, you'll be dead in the water because they're going to come right back down, right back to where they were or lower than where they took off.
So in the last 30 days, best and worst trades, we always ask you this.
The best is going to be a put option I had on One West Marine, and I made 81%. Probably should have made 200%, but the market makers in these thin stocks, they're not so favorable to us traders out here. So that was the best one. That was 81%. The worst trade right now, I just recently had a 100% loser in my options program. That's obviously the worst. As a swing trade, though, no, we've been pretty efficient. So I don't think we've had any bad ones there.
So what was the loser? Can you name it, or you don't want to name it?
Oh, I'm just trying to think what it is.
Okay, you're not withholding it. You just don't remember. That happens to all of us.
Yeah, I just know I have a 100% loser on there.
What was the analysis going into the marine stock? Why'd you short it?
Okay, so that stock, if you look at it, it went from $25 to $35, and they pushed it up to $37. And it was just going into just a big distribution level. So I said, you know what, this is a perfect spot to buy put options. And the stock came out with earnings and just absolutely imploded by, I think it was, down like $10, $12 that day, So it was just, that's why I said I should have probably made a lot more, because when I bought put options, the stock was 36 and change. Never really went higher than 37 or 38, then went down to, 25. So I really should have probably made more, but the market makers sometimes on these things, they're not so favorable. It wasn't a very liquid name, but it's a stock I'm going to probably do it again, the same play. I've done it twice already.
But as a trader, you don't beat yourself up over the woulda, coulda, shoulda, because you can't even remember your 100% loss from the last month.
I don't even know. As a trader, it's just we move on to the next one, and that'll be it. If that wasn't my last winner there, I wouldn't even remember that probably.
All right. Well, Nick, your website is inthemoneystocks.com. Always appreciate checking in with you. So we'll talk to you in about 30 days.
It's always great to be with you, Bill. Thank you.